We're talking about a country and economy that is performing really well, manufacturing sector and both services sectors expanding, inflation expectations rising, wages rising, inflation core reading also the highest in decades. And yet the central bank still thinks that hasn't seen enough evidence that inflation will prove to be, sustainably high towards that 2%. So we think that rhetoric is likely to change next month. But in the meantime, as you say, the BOJ has opened the door for the market to test higher levels in dollar yen.
And so where does the dollar yen settle? Because it just seems to be going one way. Now, too much weakness in the yen also may not be good from importing inflation.
Yes, that's right. So from a technical perspective, we need to break through that 142.25 level, that previous high. And then we're talking 145. And the extent or the speed of that move, we think will be important in terms of increasing the risk of any sort of intervention coming from them off. But overall, as you say, we think that the market is going to push the bank to do something about its Uber policy. And again, a weaker currency, as you say, Tanvir, is an additional sort of factor that brings inflation and pushes inflation higher still.
Now, we've seen the Australians, there's a lot of expectation regarding China's stimulus. Is there a risk, though, that the China stimulus doesn't come in as robust as people are expecting and we see that weakness just play back through for the Aussie dollar?
Yes. So certainly, we've had so much media coverage around the up-and-coming stimulus. But what we've seen so far is very much a demand-driven stimulus, lower interest rates by a little bit more sort of incentives. What we really need to see is the fiscal side to come through with some, real money and provide an incentive not only for the consumer but also for the corporate to spend, and particularly in terms of investment. So that is the risk. But for the Aussie dollar in particular, it's worth highlighting that it's not just going up because of what's going on in China. It's obviously the RBA turning more hawkish. That has been very helpful from a rates differential perspective, as well as risk sentiment. All this talk of, Fed hikes and so on. And yet you see the S&P 500 performing really well, credit spreads narrowing. So that backdrop of positive risk sentiment has also been very, very good for the Aussie.
Right. What is your top currency trade right now, Rodrigo?
Well, we've still been kind of looking at the Aussie crosses in particular. Aussie key, we wouldn't be surprised to see levels above 112, for instance. And still, Aussie yen, we have this backdrop of the yen weakening, which is further to go. And then for the Aussies to still perform quite well and head towards that 70 level. So we like the Aussie yen higher. We think that, levels above 98 could be tested pretty soon. And similarly, Aussie Kiwi, we like it above 113 as well.